The struggle's been real today trying to get this video made. Okay, so today our team went and met with Town Bank Mortgage and Daniel Evans and Delon Downing and a gal named Nicole Levisque, if that's how you pronounce it. She gave a presentation. She is a credit enhancement specialist. And here's what you need to know. So you are interested in buying a house. Let's say it's this year, it's next year. And the last thing you want to do is talk to the lender. What you want to do is you want to get on Zillow, you want to get on Realtor.com, you may even speak to a realtor, get them to start sending things to you, and you're checking everything out, and you're putting off talking to the lender. You got to stop doing that, and let me tell you why. As soon as you can, as soon as you're considering buying a house, I would recommend talking to a lender and letting them pull your credit. Now you may think, that's gonna hurt my credit score. Well, apparently that's a myth. And the credit score that you can see is your consumer credit score. What they see is what they call a mortgage credit score or a hard credit score, FICO score, and it's a little bit different. And that's the one that's really gonna matter when it comes down to buying a home. So the beauty of going ahead and having them pull it soon, let's say we're in the month of February and you're not planning to buy a house until September. Well, they pull your credit and there's maybe a medical something on there. Maybe there's just the way your credit cards, maybe you're paying everything off every month like you should, but yet the credit companies, the FICO score is really a debt score. What they're trying to see is that you can pay off debt. You would think you pay off your cards every month and they would love that. They actually sometimes like it if you keep a little bit of a balance. Long story short, there's a system that you need to know. And these folks like Nicole know how to get your credit score up. Now, the purpose of having a high credit score is one, you get a better rate. And two, if you are not putting 20% down on a loan, that's you're gonna have private mortgage insurance as part of your loan. And the higher your score, the lower that amount is going to be. So she gave us a for instance today that someone was getting a $350,000 loan and originally their credit was about 680. She was able to pull it up to 640 and it ended up saving them $300 a month, which times 12 is quite a bit of money. So that's one reason why you want to do it. And two, one, it's going to help you qualify for better loan options. So it could be, if you have a low score, they're the only one you could get is an FHA loan, which those loans are good. However, you're always going to have private mortgage insurance. It's never going to go away for the life of the loan. So if you can avoid an FHA loan, I personally think that's a good thing because private mortgage insurance is something that once you own more than 20%, you have more than 20% equity in the home, that can drop off. It also, obviously, is going to help you increase your interest rate. It's going to increase your buying power, and it's going to increase the number of loan options available. So that's one of the many reasons why you want them to go ahead and pull your credit. And don't be scared of it. Again, I think that's one of the things I have heard over the years is I don't want my credit score to get hit because someone's pulled it. Well, if you apply for 15 different credit cards and go to 15 different people to get a car loan, well then you might take a little bit of a hit. But apparently this, what is called a hard pull, will only give them an idea of your credit score and where you fall and what they can do to improve it. So this was much clearer when I gave it the first time, but this might be my 5th time doing it today. And I hope it makes sense. If it doesn't and you want more information, I'm always available. And if I can't explain it to you, I will point you in the direction of these folks at Town Bank and they will help. Thank you.